Hello guys, welcome back to another Lumley trading video. In this one we're going to be doing some in-depth stock analysis on Tesla, ticker TSLA. So to get straight into it, obviously Friday it closed up basically break even, up 0.08%. But what is quite interesting, if you go back, I think it was about a week ago, maybe a bit less than that, we did some analysis on Tesla, and it's going to be kind of reaffirming that and kind of going out what was the trade plan and kind of how it's moving from now, because what you're going to see is at both 165 and 160 we had our first deviation on both the 6 month on the left and the first deviation on the 1 year, which is on the right. Now we hit this level, and again, what do we expect to happen when you first hit this level? The first time you hit it, you always expect a bounce. Again, obviously nothing's 100%, but 9 times out of 10 you can go back and check these analysis videos on different types of stocks and see how it reacts. But the first time you hit these levels, you tend to get that bounce. Now this provides kind of two trading opportunities. Firstly, you can trade the bounce, which is what we talked about in the analysis video. You play the bounce when you're up maybe 3-4 points. On a stock like Tesla, you could probably even wait for 5 points profit. When you're in 5 points profit, you move your stop to break even, you lock in a tiny bit of profits, and then what you're really looking to do is play the direction, because again, then it's essentially a risk-free trade. If it goes against you, cool, you'll get out break even or with a bit of profit. But if direction continues, like in this case, if you're getting in around that 165, right now you would have been up $30 or so, 30 points per stock really, which is, even if you're on 10 shares, still $300, and you wouldn't have taken much risk on for that kind of position. And again, that's why we talk about playing it as a bounce, so we can get a really high probability setup, because again, that works 9 times out of 10. So if we know that, we can move our stock to break even after the bounce is completed. And then worst case scenario, it comes back, we get out near break even or take brick profit, but in the still quite high probability that the bounce continues and it acts as more as a reversal, then you have a lot of upside, especially when you're trading this at a second or third deviation, because again, this point we're looking at around 40 points of upside. On other cases we're looking, if you're trading it from the second deviation, just how much upside are we looking at? Second deviation to statistical mean, near enough 100 points on it. That's why it's really key to, if you're playing the bounces, not to kind of just lock in your profits, because then you're not getting a great kind of, it'll still be a good strategy, it will still be profitable, but you just leave a lot of money on the table. So that was kind of just a trade plan on what we were looking at. So now we do expect Tesla to most likely continue to around 210, 215, because these are our statistical means. And again, this is where you will kind of consider fair value on the stock. So it's not unlikely to see price reversal here, even if it's going to continue down. So be paying attention to that, but obviously be smart at locking in profits. Where are we starting to hesitate? We have been here now for 2 days, or you could even say 3 days, because this is where the big move stopped, and it was a kind of previous high. So and a pivot level, it was that low, this high, coming back to retest it. So again, if you're in with, let's say you originally took the trade with 100 shares, you locked in 20 on the bounce. Right now we'd probably lock in about 50%, 40 more shares. The reason for that is we've already made 3/4 of the move. Lock in some profits here, just in case again it starts to fall. You don't want to be giving up all that profit that you've made. So again, wouldn't be unlikely to see a reversal to here. Now if we hit this and push back down again, wouldn't be unlikely to see a bounce off this. We wouldn't really trade this bounce though, because it's already done it. And instead we would probably wait for more the breakdown. And what would we want to see? A break below 160, come back to retest it as resistance. If that holds, we're likely to continue down. 113 is going to be that target to around 115, our second deviation on both the 6 month and the 1 year. If we go lower, we're then looking at $65 as that final support. That one obviously is quite unlikely, even if markets continue weak, but it's always better to be prepared. Now on the other hand, if we end up breaking this statistical mean, the fair value area, and we break higher, we're then looking at 257 and 265. And again, this would really be the exact same trade plan as what happened here, is what we would look for. The first time you hit it, play that pullback, up 5 points, move your stop to break even, and then look to play direction. If we then come back to retest it and break over, what we want to see is a break above 265, come back to test it as a support, and if it holds, it's a good indication that we're going to continue up to 307 to 315. And if we can break that, 355 to 366, and our final levels at 404 and 416. Now what's really nice on Tesla is you can see the levels, or kind of the standard deviation channels, are very close to each other, which basically makes all these levels ranges, which again is going to make them easier to trade because they're going to be much stronger. So obviously if we break to the downside, you now have that kind of $5 zone. If you kind of get a close below this, probably a good indication it's failed. Stop out the trade if you were trading the bounce. But again, if it's within this area you start to see a bounce, probably a good chance that it can continue. So yeah, being in these close ranges is just going to make them even kind of easier and cleaner to trade, because whether the algorithm or the trader is looking at a 6-month or 1-year chart, you're still getting those same and near enough levels. So this is kind of the main breakdown on Tesla. Again, we do provide levels to the up and down side, so if I have a personal bias, it doesn't affect the video. So that's why we don't really give a direction. It's just you will either have a bullish or bearish opinion on it, and you can use these levels maybe if you don't have an opinion on it. As of right now, we are a bit more oversold, so we would be a tiny bit more bullish on it to around 210. Then we have no bias on it. If we start to break above it again, we're always a bit more overbought on it, and if we're below, we're always a bit more oversold. So you can always kind of flip your bearish using this. Is kind of one of the ways that I will pick a bear or kind of a bias on a stock. But again, I don't really pay too much attention to that because I'm trading 2 trade plans: the bounce and also the breakthrough, retest, and direction. So I'm not too fussed on which direction it pushes. I will just make the trade opportunity out of the direction it moves. Anyway, I hope you enjoyed the breakdown on Tesla. If you did, why not drop a like and subscribe and check out one of these 2 analysis videos.